part of what you're talking about, the demise of the American hegemony power, is the currency. The currency is going to collapse because of the debt crisis. And I wouldn't be surprised. I mean, we'll almost certainly get a crisis in terms of the valuation of financial assets, because if you're going to get a collapsing dollar, then you're going to get rising interest rates. I mean, I know that they're talking about interest rates falling and all the rest of it, but that is not going to be a long-lasting thing. They are going to fall very slightly, perhaps because the political landscape demands it. And the Fed is under enormous pressure. When you see signs of a recession arriving, what do? You reduce interest rates. But in fact, inflation isn't going away. It'll be coming back. The purchasing power of the dollar will decline. Interest rates will have to rise. And then what happens? I mean, you can see the whole thing beginning to fall apart. I don't think we've got very long before that happens. The Enbridge idea, I think, started with the Bank of International Settlements. I don't see it's necessary. There is this tendency to think we live in a technocratic age, and so there's a technocratic solution to everything. Really? Mm-hmm. It just complicates things. I mean, what you want out of a medium of settlement medium, credit, money, whatever, you want something which is absolutely clear and very simple and ordinary people can respect. You start doing things like, CBDCs and Enbridge and all the rest of it, you're going to lose everybody, really. It doesn't make much sense to me. Mm-hmm. I wouldn't rule out the possibility that they'll go down that route because it is extremely fashionable, but I think it would be a bit stupid when actually there's a very simple solution staring them in the face. Introduce a proper gold standard so that their currencies become gold substitutes. And funnily enough, I'm actually writing about it on my Substack, which will be published. This will be published on Thursday, and I lay out exactly how to do this. It's not difficult; it really isn't. And we've got lessons we've learned from the past. I mean, particularly the failings of the Bank Charter Act of 1844 in the UK, which sort of set the scene forevermore. There were definite failings in there. So, we've learned by experience. So what we could do today is actually a far better thing and is likely to be lasting, long lasting. The problem, Jay, is that governments don't like firm currencies for the very simple reason they want to use the seigniorage. They want to expand it. They want to finance things by inflationary means. So that is the real problem. And I don't see the Western governments coming off that desire, the policy at all. I mean, it would take a real crisis and maybe following on crises in the plural in order to convince their electorates that that stability in the currency would be a good thing. But we're nowhere near that in the West. I mean, they're a lot closer to it in the East because they haven't had, 60, 70, 80 years of Keynesian and, Keynesian rubbish, this. So, I mean, they're being given the Keynesian stuff. That is absolutely for sure. And some of them are beginning to fall for it. But I don't think it's nearly as ingrained as it is in the West. I mean, no. It's from my point of view, it's actually very, very simple. I think that we will actually end up being saved by the Russia-China access if they do go on to a proper gold standard. And I think they will, apart from anything else. China's plans, which Russia is very much involved with, is to have an industrial revolution throughout Asia. The industrial revolution which basically escaped them in the 19th century when Europe was really going gangbusters on technology, innovation, new products, lifting people from a subsistence living to relative comfort. I mean, we've spoiled ourselves. We've moved on, if you like, from that, and we just all want to put our feet up and not do any work. Whereas the Chinese and the Russians and all the rest of them are actually extremely enthusiastic about an industrial revolution, and they will bring it about.
The ongoing discussion around gold and silver and their potential return as global standards is one of the most fascinating developments in recent financial history. Alasdair Macleod, a well-known economist and expert on sound money, has consistently emphasized the role that gold, and to a lesser extent silver, could play in stabilizing the global financial system, particularly in the face of the challenges posed by fiat currencies and ballooning government debts. In Macleod's analysis, the world is approaching a critical juncture where fiat currency systems, led by the US dollar, are reaching the limits of sustainability. With inflation surging, debts rising, and the threat of currency devaluation looming large, he believes that the logical next step for many countries, especially those in the East, is to adopt a gold standard or, at the very least, a gold-backed currency system. One of the key points Macleod raises is the inherent instability of fiat currencies, especially in the context of rising government debts. Since fiat currencies are not backed by any tangible asset like gold or silver, governments have the ability to print money at will, leading to inflation and the erosion of purchasing power. This system, which has been in place since the US abandoned the gold standard in 1971, has created a significant imbalance in the global economy. In the fiat system, governments rely on the ability to inflate their currencies to finance spending, particularly through debt. While this has allowed for economic growth in the short term, it has also led to the accumulation of massive levels of public and private debt, especially in Western countries. As Macleod notes, Western governments are unlikely to abandon this inflationary model voluntarily because it provides them with seigniorage, the ability to profit from issuing currency. The real challenge, however, is that this model is not sustainable in the long run, and the cracks are beginning to show. Macleod suggests that Western countries, especially the US, are facing a reckoning as their fiat currencies lose value. The constant printing of money to cover deficits has created an unsustainable debt bubble, and when it bursts, the consequences will be severe. Interest rates will rise, financial assets will lose value, and the dollar itself could collapse, taking down other fiat currencies with it. Against this backdrop, gold and silver are emerging as safe havens for countries looking to protect their wealth from the inevitable collapse of fiat currencies. As Macleod points out, gold has always been a reliable store of value, and its role as money stretches back thousands of years. Unlike fiat currencies, gold cannot be printed or manipulated by central banks, which makes it an attractive option for countries seeking to protect their economies. One of the most important trends Macleod highlights is the growing interest in gold among countries in the East, particularly China and Russia. These countries have been accumulating gold at an unprecedented rate, repatriating their reserves and preparing for a potential shift away from the US dollar. Macleod believes that these countries are positioning themselves to lead the way in the adoption of a new gold-backed financial system. China, in particular, is seen as a key player in this transition. The Chinese government has been quietly building its gold reserves, and there is widespread speculation that it holds far more gold than it officially reports. Some analysts, including Macleod, believe that China may have as much as 40,000 metric tons of gold, far more than the 2,700 metric tons it officially claims. This would give China a dominant position in any future gold-backed financial system, providing it with significant leverage over the global economy. Russia, too, has been increasing its gold reserves while maintaining relatively low levels of government debt. Macleod notes that Russia's debt-to-GDP ratio is only 22%, and its flat income tax rate of 13 to 15% makes it an attractive environment for economic growth. If Russia were to adopt a gold standard, it would further strengthen its economy and provide a stable foundation for growth, particularly in the face of Western sanctions and economic pressures.
My take on it is it's actually extremely easy to introduce a gold-backed, let's say, a gold substitute currency for trade settlement purposes. You could do it tomorrow. It really is not difficult. I think more importantly, Russia would benefit hugely from going on to a gold standard. I mean, her economy would need very little adjustment because government spending isn't all that high. Okay, it's been increased because of the war against NATO in Ukraine, but it's still. I mean, their debt to GDP, in spite of all that spending, is still only 22%, and income tax in Russia, you're looking at a flat rate of 13 to 15%. What's not to like about that? Yet their interest rates, I mean, the reference rate for the Bank of Russia is 18%. The reason for this is that nobody has confidence in the currency. Who would want to buy rubles? Fiat rubles. I mean, I might like the numbers in the economy, but I don't think I'd want to buy fiat rubles. So you can see that the thing that is missing is the guarantee of the value of the ruble. If you can do that, then interest rates will decline, and you have an economy which doesn't demand great consumer spending being financed by bank credit or whatever. It's basically an economy which can grow on production, and it's got all the characteristics of a really good 19th century economy. So that's the way they should go. And I think if Russia does it, then you'll find that the Saudis will do it quite quickly, because they're in a similar situation. I mean, they're selling oil for all these rubbish currencies. Do they really want them? No. I mean, they're being very polite about it, as everybody is, but nobody wants, sort of Egyptian pounds or Iranian rials or Pakistani rupees, Indian rupees. They're all rubbish, and rupiahs from Indonesia. I mean, these are not good currencies. And so a gold standard, I think, is actually the answer, a proper gold standard. And the merit of it is that you could introduce a gold standard without having to have the agreement, unanimous agreement of the BRICS members. You just say to them, look, the facility is here if you want it. You don't have to agree to it. If you don't want it, don't take it. It's very simple. So why aren't they doing it? The reason they're not doing it is that the moment they go on to a gold standard, a credible gold standard, they will destroy the fiat currency world, including, guess what? The dollar. And I don't think the Chinese in particular want to be associated with a deliberate act that destroys the dollar. They would rather protect themselves from a collapse in the dollar by whatever means, which obviously will involve going on to some sort of gold standard. But once it is completely obvious that they've got to protect themselves and it's not their fault. So we're at this transition, and I think it's very important to understand this. Part of what you're talking about, the demise of the American hegemony power, is the currency. The currency is going to collapse because of the debt crisis. And I wouldn't be surprised. I mean, we'll almost certainly get a crisis in terms of the valuation of financial assets, because if you're going to get a collapsing dollar, then you're going to get rising interest rates. I mean, I know that they're talking about interest rates falling and all the rest of it, but that is not going to be a long-lasting thing. They are going to fall very slightly, perhaps because the political landscape demands it. And the Fed is under enormous pressure. When you see signs of a recession arriving, what do? You reduce interest rates. But in fact, inflation isn't going away. It'll be coming back. The purchasing power of the dollar will decline. Interest rates will have to rise. And then what happens? I mean, you can see the whole thing beginning to fall apart. I don't think we've got very long before that happens.
Macleod's solution to the growing economic imbalances is simple yet profound: a return to the gold standard. In a gold-backed system, currencies would be tied to a fixed amount of gold, limiting the ability of governments to print money and ensuring long-term economic stability. The beauty of such a system is its simplicity. It imposes fiscal discipline on governments, preventing them from engaging in reckless spending and inflationary policies. Moreover, a gold standard would provide a stable and predictable store of value, something sorely lacking in today's fiat currency systems. Introducing a gold-backed currency system, according to Macleod, would not be difficult. Countries could begin by using gold as a medium of exchange for international trade, allowing them to bypass the volatility and uncertainty of fiat currencies. Over time, as confidence in the system grows, more countries would likely adopt gold-backed currencies, and the global financial system would gradually shift back to a gold standard. Macleod also emphasizes that we have learned valuable lessons from the past, particularly from the shortcomings of previous gold-backed systems, such as the Bank Charter Act of 1844 in the UK. With modern technology and a better understanding of monetary policy, he believes we could create a more robust and enduring gold standard, one that would provide long-term stability for the global economy. While much of the focus has been on gold, silver also plays a critical role in Macleod's vision of the future financial system. Silver has historically been used alongside gold as a form of money, and it remains an essential component of global trade and industry. In addition to its monetary value, silver has significant industrial uses, particularly in the green energy sector, where it is a vital component in solar panels, electric vehicle batteries, and other technologies that are driving the global energy transition. The growing demand for silver, particularly in emerging industries, suggests that its value is poised to increase dramatically in the coming years. Macleod points out that the price of silver has been artificially suppressed for years, much like gold, and that as the global financial system shifts towards sound money principles, the true value of silver will be realized. Silver's dual role as both an industrial commodity and a store of value makes it uniquely positioned to benefit from the transition away from fiat currencies. As demand for silver increases, its price will rise, providing a significant opportunity for investors who recognize its potential. One of the primary reasons Western economies resist the idea of returning to a gold standard is because it would limit their ability to finance government spending through inflation. As Macleod points out, governments prefer fiat currencies because they allow for greater flexibility in managing their economies. However, this flexibility comes at a cost. Inflation erodes the purchasing power of citizens, leads to rising debt levels, and creates economic instability. In contrast, a gold-backed system would force governments to live within their means. It would require them to balance their budgets and avoid excessive borrowing, which would lead to more stable and sustainable economic growth. While this may be unappealing to politicians who prefer to promise more spending and lower taxes, it is ultimately the only way to ensure long-term economic stability. Macleod also notes that the U.S. government, in particular, has a vested interest in maintaining the current system because it allows the U.S. to run massive trade deficits without consequence. Since the U.S. dollar is the world's reserve currency, other countries are willing to hold dollars in exchange for goods and services. This has allowed the U.S. to live beyond its means for decades, but it has also created an unsustainable economic model. As other countries move toward gold-backed currencies, the U.S. will be forced to confront the reality that its days of printing and spending are numbered. Once the dollar loses its status as the world's reserve currency, the U.S. will no longer be able to run massive deficits without consequence. At that point, a return to sound money principles, such as the gold standard, will become inevitable. For investors, the writing on the wall is clear. The current fiat currency system is on borrowed time, and the transition to a gold-backed financial system is already underway, especially in the East. Those who recognize this shift and position themselves accordingly will be well-placed to benefit from the changes that are coming. Investing in gold and silver is a crucial step for anyone looking to protect their wealth from the coming collapse of fiat currencies. As Macleod points out, gold and silver have been stores of value for thousands of years, and they will continue to serve this role in the future. As fiat currencies lose value, the prices of gold and silver will rise, providing a hedge against inflation and economic instability. In addition to physical gold and silver, investors should also consider mining stocks, which offer significant upside potential. As demand for gold and silver increases, mining companies will become increasingly profitable, providing investors with substantial returns. Alasdair Macleod's analysis paints a stark picture of the future of the global financial system. The era of fiat currencies, led by the US dollar, is coming to an end. As debt levels rise and inflation erodes the value of fiat money, the world is turning back to gold and silver as the foundation of a stable and sustainable financial system. While Western governments are likely to resist this transition, countries in the East, particularly China and Russia, are leading the way. By accumulating gold and preparing for a post-dollar world, these nations are positioning themselves to thrive in the new financial order. For investors, the message is clear. Now is the time to invest in gold and silver. As the global financial system shifts, those who are prepared will be the ones who benefit. The return to sound money is not just a possibility, it is an inevitability. And those who act now will secure their place in the new financial order.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.